Good morning and welcome everyone to the Money Control live stream. You're watching the opening bell and I'm your host Nikki Mirchandani. Indian equity is set to consolidate after 4-day winning streak clocked in the previous week. Markets look set now. Actually, I'll rather look for fresh triggers post completion of Q3 earnings season. PSU Bank Index, that's one thing that you need to watch out for, on course to hit new highs. HDFC Bank story continues to be monitored. Key question for HDFC Bank: has the bottom formed? Well, let's look at the trade setup closely. GIFT Nifty at this point of time indicates a flat start coming in for the last read after the record high scaled by Nifty. Asian market cautious as inflation dashes rate cut hopes. Now fading chances for early rate cuts globally has soured the sentiment, and investors are hoping China markets to return from holiday with spring in their step. A holiday for US markets also made for thin trading. But if you look at the FII and the DII data, well, some bit of solace there coming in from FII after they turning to be net sellers by a huge amount, more than 3,000 odd crore on Friday. But they've bought in equities to an extent of 253 odd crore on Friday. Thursday's data, I stand corrected, was a bit disappointing for Indian equity markets. Well, DIIs on the other side have purchased equities to an extent of 1,571 odd crore. But let's get going with strategies, levels and top recommendations of the day with Prashant Sawant, who's the founder, Catalyst Wealth. Morning there.
Good morning, Nick, and good morning to all the viewers.
Okay, what's the trade setup looking like to you? What are the levels that you said suggesting for Nifty and Bank Nifty? And the bigger question that I wanted to ask here is, do you think PSU banks per se are now or set on course to scale newer highs?
So let's start with the indices. I think if you look at a pre-open, Nifty shows a very strong pre-open. It's a frozen level, so 22,103, hardly 25 points, 20 points away from the previous all-time high. So whenever you are approaching an all-time high, I always suggest to be more cautious. Do not expect a breakout, but better trail your positions. Your trailing stop loss now has to be strictly, those who are positional traders, slightly below 22,000. So 21,950 spot should be your trailing stop loss. So those who are short-term traders, you can use 22,040 as your trailing stop loss, because if you're short-term, then any reversal, you should be very near to booking your profits. Overall, if we get a close about 22,150, I think we can see a strong rally in Nifty this week. So I think a key level for me would be that 22,150 mark in spot. If we close above that, we can see another 50-100 points very easily scaling up to 22,200, 2250 odd levels. But I think at the current levels, the index which looks good to enter would be Bank Nifty. And there is a gap on Bank Nifty right up from 48,000 levels to 46,500 levels. We have just approached the lower band of the gap. So I would give it a day or two more and wait for a close above 46,600, which is hardly 200 points from Friday's closing. Already we are seeing or very near to that as pre-open, but I would wait for a close around 46,600. Next day I would go long. My stop loss would be 46,200. That would be a 1% risk. And I would look out for levels around 47,200 as my first target, and next target as 47,500. So the index to trade for the week, according to me, should be Bank Nifty.
Okay, Bank Nifty. What's your view on PSU banks? And actually, since you've bought Bank Nifty up, let's also chat about HDFC Bank, because I think the key question is, are there any signs of bottoming out? I mean, HDFC Bank has started to see flurry of memes right now. Big stocks technically seen, they kind of bottom out when the memes start. Do you think now it's also on the course of some revival? Can you in a Nifty, HDFC Bank weightage is at 11.5, Reliance is at 10. In Bank Nifty, HDFC Bank contributes to 26.4 and ICICI Bank at 24.5%. What's your view there?
So Reliance, as you said, has definitely outperformed. And if you talk about HDFC Bank, a big underperformer. I think currently also there's any pullback to around 1480 odd levels would be sold. But if you want to look at 1480 as a short-term target, around 1475, 1480, which is around 60-70 points from the current level, you can go long and keep stop losses 1395. So against a 20-point risk, you are looking at a 60-70 points reward. It will be a good trade, swing trade for the week. But I think positionally, I'm still a bit skeptical about saying that HDFC Bank is out of the woods. I would wait for a close above 1500, which is still quite far. But I think that would definitely make some statement about as far as HDFC Bank is concerned.
Okay, all right. We'll get back to you in just a jiffy and let's address the market open there for you. Well, you're looking at a positive start, anticipated a flat start. So it's a good start to the day, or rather, good start to the week. 22,000 above that level. 0.1% clocked in on Nifty right now and sitting comfortably, or let's just say nearing that 22,100 mark. 46,500 approaching that level steadily, gains to an extent of 0.2% clocked in by Bank Nifty. Of course, Prashant said that Bank Nifty is the one that we need to watch out for, or rather have a strategy for the week. Some momentum clearly building up on that one. Well, talk about the mid-cap index. We're seeing sharp gains, 0.5% clocked in for the mid-cap index, and small-cap index, a bit of outperformance there, almost 0.75% clocked in for small cap as well. Market breadth right now is skewed in the favor of clearly advances as compared to that of declines. And look at the PSU banks. Well, that's the one which is gaining a lot of traction these days and also is on course rather to scale the fresh highs. Whether it happens in this week, on this day, is something that we perhaps will get back with Prashant and ask him his view and his top recommendations coming in from that basket. And overall, Nifty IT, well, 0.25% lost in on Nifty IT, a bit of profit booking seen after a bit of surge that has come through, or rather the support which has come through from the index for the month of Feb. Metal index right now is showing fair bit of outperformance or resilience in early deals, and it's rather playing up to the tunes. Metal has been a strong performing pocket thus far, and auto also seems to be in top gear. Let's look at the top gainers and the top losers out there, just to see where the market breadth, or rather which is the stock which is gaining a lot of traction out there. Adani Ports actually makes it to the list. Bajaj Auto, which is fixed in a record date for the buyback. Adani Enterprises, well, the bunch of names out there. So it's clearly Adani group of companies which are doing rather well in trade. DRL, NTPC and Reliance. So huge support coming in from Reliance, the heavyweight, because of which you're seeing that fair bit of momentum tracking up for the markets. Tata Motors and Eicher Motors, both these auto companies are rather doing well. UPL also not acting any different, a bit of support which is being lent in after the sharp dropping that has come through in the previous session. Let's talk about the top losers out there. Well, Wipro, TCS, the top two IT companies have rather taken a bit of beating in the morning, and L&T is the top loser. A bit of, clearly you could see those heavyweights weighing down. IndusInd Bank, Axis Bank and Apollo Hospital. So it's a combination of banks along with, the IT counters which are on the flip side of the trade. But let's actually pull up HDFC Bank, because we need to see whether there are key signs of bottom formation taking place for HDFC Bank. And right now, if you look at the chart, well, we're seeing a fair bit of traction coming in on this one. Some recovery clearly at 4, but let's go across to Prashant and check with him what really stands out for him. Is it the IT? Is it the banks which are disappointing? Or the Adani group of companies on the flip side, or rather on the positive side, where he's sensing some amount of traction building up?
So, Nikki, I think one stock which I've been recommending consistently as a disclaimer, I've shared with my clients as well, and I'm looking at a positional view upon is IOC. I think one can go long, keep adding all dips as long as 175 spot closing, stop loss is intact. You can look out for targets around 215 to 220. So positionally, that is one stock that stands out for me as a positional trade. And as far as short term is concerned, I think LIC Housing Finance is looking good, quoting around 644. One can go long with stop losses around 625, 628, and look out for targets around 675, 680.
All right. How about Adani group of companies? Anything that stands out for you there?
So I think one stock which has definitely outperformed is Adani Ports, but I don't see a good risk reward at the current level. So I would wait. And I think as far as Adani Enterprise is concerned, it is at a resistance. So no point going long here. I think better to skip it. But definitely Adani Ports has to be on your radar. And if you see any dip in this stock going on to levels around 1300, 13.5, then definitely you can go long on this. At current levels, I'll wait for a dip.
Okay, there are a couple of developments which have technically taken place for Adani group of companies. Let me just address that in a jiffy here. Let's address in the stocks and news. Adani group is in talks with the sovereign funds to raise up to $2.6 billion. That's the news that we are picking up from the papers out there. The Adani group is in advance. That's actually the business standard news that we're talking about. The group, which expects to close the ongoing financial year March with 80,000 crore of EBITDA, has held a series now in roadshows in terms of in London, Dubai, Singapore, with potential investor briefing them about their future growth plans. That's one bit of development. But of course, like Prashant suggested, that Adani Ports is something that you can watch out for with any amount of dips that you see. But let's address in stocks to watch out for. First, let's look at Paytm, whether it's clocked in more upside, because the company has announced in a tie-up with Axis Bank as its nodal bank and has shifted its nodal account now to Axis Bank via an escrow account. Of course, you're seeing that fair bit of momentum coming in for Paytm right now, almost 5%. Need to be seen if that's the upper circuit limit for Paytm after the revision. RBI also do bear in mind the fact that has extended it a deadline for Paytm payment banks to March 15 to stop operations, but Paytm QR, sandbox and card machines will continue to function beyond March 15. That's the official press release that has come through from the company. Now do bear in mind the fact that company stock snapped a 6th session losing streak to end 5% higher on Friday ahead of the RBI clarification which came through and the Axis Bank development which the company has suggested of late. PB Fintech, that's another one which you need to keep a close watch out on. Again, a 5% nearly that uptick coming in on PB Fintech. IRDA has granted an in-principle approval to Policy Bazaar Insurance Brokers, which is a private limited company and also the wholly owned subsidiary of the company. This is for upgradation of license to composite insurance broker. So that's a fair bit of development which has come through and some amount of reaction which has also come through on that one. Bajaj Auto was one of the top gainers on the list right now that you saw. Of course, the buyback committee has fixed in Feb 29 as the record date for determining the eligibility for buyback. On Jan 8, do bear in mind the fact that board had already approved in the proposal to buy up to 40 lakh shares at a price of 10,000 per share each. So that's the word coming in. A bit of smart gains and the smart price that we're looking at, and the buyback is amounting to an extent of 4,000 crore. Some traction that you might just see building in on this one ahead of the record date. Novartis and Dr. Reddy, two pharma companies that need to be on your watch list for the day. Novartis has announced a strategic review of Novartis India. Now, Dr. Reddy is among the top pharma company which is keen to acquire in Novartis AG stakes in the company put together. And that's the news that we're picking up from Nomura. Has also explained what does this mean and how will that impact the financials. So it's an extensive report there. But coming back to you, Prashant, Paytm, do you think more upside coming in for this one? And also, what do you like from the PSU bank space right now?
So, Nikki, as far as Paytm is concerned, I would definitely skip it. I don't want to be one of those who are trying to catch the bottom. And as long as there is a lot of noise around the counter, I would better park my hard-earned money somewhere else. As far as PSU banks are concerned, SBI stands out for sure, but I think it needs to cool off a bit. Currently quoting around say 760. So if you get it around 745, it would be a good level to enter and go along with stop losses around 720, 25. And my target for this stock is around 810 positionally, 810. As far as Canara Bank is concerned, another good stock, but again at a resistance. So I think a dip and a little bit of cooling off is needed in this sector to go fresh longs.
All right, Prashant, we'll just leave it at that. And thank you so much for taking out the time and having this conversation right here with us. All right, now let's navigate our conversation quickly to Sandip Agarwal, the fund manager at Sowilo Investment Manager, beg your pardon. Morning there.
Good morning. Good morning.
How are you doing and how is the market shaping up for you, especially PSU banks? Does that stand out for you? Which is the sector that you're closely tracking at this time?
Mickey, there are pockets of very good value still in some of the spaces which we are closely monitoring, and we are also, recommending our clients. For instance, I think that, still there is some space in the PSU space because, the asset liability mismatch, I think, will continue for some more time. So the stronger franchisee of the PSU banks will have an advantage to, get more deposits going forward. But having said so, I would also like to highlight that, some of the private banks which are large and which have gone through time correction and even massive derating, those are the ones which should also be looked, because once interest rate cycle starts reversing, there will be some amount of good money which can be made there as well. Second sector which we are again started looking very interestingly is the fintech space, because when the IPOs came and the listings happened, they happened at insane revenue to EV to revenue and all those parameters, which I think is not good for every probably for medium term investors. Now most of them have started tracking earnings. So the companies, because of the pain they have gone through in last 2-3 years, the likes of Nykas, Paytms, PB Fintech, and many of those names, I think rationality has come in the stock prices, and also now people have started valuing them on earnings. So I think it is a very good start. So wherever there is a earnings related value or earnings related talk which has started coming in valuing this stock, I think it is a very good start. And wherever we see that there is deep value, we will again start looking at them. But they are becoming now interesting versus 2 years back, to be honest. And the third space, which I think is the chemical space, where there is a lot of pain right now. But I think maybe 1 or 2 quarters of patience will pay off. So we are also looking at that space quite aggressively now.
Chemical, I'm not really surprised with that name. Any particular stocks that you'd want to list, typically that one could look at in the quarter, in next 2 quarters from here on?
No, so because we manage PMS and our clients hold position, it's very difficult to give any specific names. But let me tell you that we have seen in last 22 years that in every sector, the leaders do well. So even that will be true in chemicals, in my view. So you should go ahead with chemicals to start with, and then as you start seeing momentum and growth coming back, then probably you can switch to the second rung players or the third rung players. But that is still some time away. I think bigger value still is there in the top names, and wherever there is a comfort and valuation comfort is looking good now, I think one should look at those names, those spaces, the large names particularly.
What really stood out for you within the whole Q3 earnings season? Were there more upgrades for you as compared to downgrades? And if upgrades, was it in the likes of autos and healthcare? What really actually went through a downgrade in terms of the performance sectorally?
So I think autos has done well, and we have seen, but again I would say that the upgrade pace of upgrade even in auto has cooled off. So I will say that the likes of Bajaj Auto, Hero, TVS, which have done phenomenally well for our clients in recent past, I think the pace of upgrades in them has also reduced. So I think they may be in the last leg of the big rally which we have seen. Again, the other sector which I think has positively surprised us is the OMCs. I think they are doing quite better than what we have expected. On the downside, I think some of the spaces still are going through downgrades, and which is like the chemical has seen biggest earnings cut in this quarter as well. But we always believe that good companies and bigger players, when the tide turns, they will be the first one to be beneficiary. So we are willing to take this pain in near term for a long term bigger gain. That is the way we look at that. So in my view, if you see from earnings upgrade and downgrade perspective, auto still has some shades of upgrade, and on the downgrades, I think chemical has been hit very hard.
Okay. Your comment coming in on Paytm, because there is a bit of back and forth which has come through on the stock. Now there is a further partnership tie-up with Axis Bank as a nodal agency with the transfer of escrow account. What do you make out of it? Any views there?
No, I think, as I said that, these fintech players, they have come off a bit in last 2 years since listing. On the price front, there is a lot more comfort now. In case of Paytm, there are few things which are still not clear. So it is very hard to take a very strong stand on that. But let me put it this way, that, it is a very strong platform for a long-term investor who is willing to, take the risk of volatility for, let's say, next 6 months to 12 months time. I think immense value could be created from this level, because see, these are unique monopoly kind of platforms which are not going to go away. We have seen that in PB Fintech, there was extreme negativity few quarters back. We have seen that in few other names in the fintech side, and they have started now doing well. Even in Zomato post superb listing, it came off quite a bit when people realized that the earnings may not come as quickly as they were anticipating. But now again, people have started looking them at earnings, and earnings have started coming in. Managements have cut costs and all. So I think in Paytm also, while it's very hard to comment in next 1 or 2 quarters, but I think it is the price at which this platform is available is very attractive.
Okay, all right. This is also bear in mind the fact the stock which hasn't really ever seen a price which is over and above IPO price. So that's a bit of disappointment there. But apart from that, HDFC Bank, speaking of disappointments coming in for the space overall, HDFC Bank I think stands out with the amount of drubbing that has come through. Of course, FIIs also have been selling HDFC Bank. There is a bit of I think negative narrative which has been tied around given the kind of fundamentals and the Q3 miss that has come through, completely brushing off the larger picture and the merger synergies which will kick off, but not anytime soon though. But what's your assessment there? Are you keeping off HDFC Bank from your portfolio? How are you looking at it?
No, so, HDFC Bank is a classic case where, people get tired of, because these are very big companies. It takes time for them to, turn around, or even on either side. And we have seen same thing happening in Reliance between 2008 to 15. We have seen same thing happening in ITC for a long period of time, even in ICICI Bank. So I think that is what we are seeing in HDFC Bank. The challenge today is, the people who the asset liability mismatch is the biggest challenge, which is leading to the NIM compression. And I think, this challenge will not go away quickly for any of the private sector banks, because, the deposit franchisee has to gain a lot of momentum. And they are, and against them, the PSUs, who has very strong branch network in the rural and tier 3 towns, tier 2 towns, where, there is a still willingness and keenness to put money in deposits. Vice versa, the top tier towns and cities where, the willingness to put in different asset classes is very high. So I think that is what is causing the NIM compression. That is what is leading to this kind of situation where we are not seeing this stock doing well. But I think, they have to, balance between growth and deposits. So the only way, if your deposits are not going to go up substantially, or you cannot gain momentum on that front immediately, then the best thing would be to, control the credit where the margins are less. So I think that is what should be the, I am sure that, HDFC Bank would be following that strategy, and that strategy should pay off. And with interest rate cuts coming in, I think this gap of, benefit will also reduce. So I think from a 2-3 quarter perspective, it should start doing well. There may be pain for 1 or 2 quarters in terms of time correction, but we don't see much pain from here. As far as our portfolio is concerned, we have been massively underweight for last 6 months on this name. But now, it has come to an interesting level, and we have to just see how much more time correction can happen, and we have to do that working.
All right. What I'd also want to chat extensively is the PSU bank and the rally that has come through. Of course, 87% was clocked in the previous year, and a 23.93% has been clocked thus far on year-to-date basis. Some experts remain cautiously optimistic, saying that there is a bit of concerns around the valuation and the index might not be able to perform as well as what it did in the previous year. Do you belong to the similar cap, A? And if yes, which stocks do you think are good picks from here on in the pecking order in terms of the valuations, not for the fondness for these stocks per se?
No, so we are always cautiously optimistic across space and across stocks. So we are not in the camp which believes that growth at any price. We are value driven, and we focus a lot on what we are getting for what we are paying. Now, coming to your specific question on PSU Bank, as I said that, they are still having that great advantage. They are having two great advantages, one of which, is now at the fag end in my view, that is the write-backs, the benefit of which has come, and the declining NPAs. The other advantage which they have, the strong deposit franchise which they have in the remote corners and towns, which has given them substantial edge, and that is the reason they have been doing phenomenally better than the private banks, and this may continue for another 2-3 quarters at least. So I think from that perspective, there is still some steam and money to be made in this name. Secondly, structurally also, if you see, these banks have started spending on technology. There is a lot more efficiency, which cannot be, completely discounted. So, but I don't think that, the valuation gap will completely merge between both private and public sector banks. There will still be some, discounts because they are finally controlled by government. So I will not say that, they should get the similar multiple, or they will anytime soon get the same multiple. But yes, there is efficiencies are improving. The willingness of investors to put money has gone up, and these banks are doing great. So I would not say that they are at the fag end of the rally in that sense. But yes, the NPA recovery they have done, probably most part of it is behind.
All right, sir, we'll just leave it at that. And thank you so much for taking out the time and having this conversation right here with us.
Thank you.
All right, enough and more ground needs to be covered, like I always say, but few stock updates there. Solar Vineyard is making waves again. The stock has rallied as much as 6% after the block days that have taken place. And what's interesting is Mangalore Refinery and Petrochemicals. Now, it's down and out. Look at Solar Vineyards. It's almost lost in 7% ground after the block deal, which was typically taking place for Solar Vineyards, where, there is Whirlwind Invest Asia, which was exiting in by selling in 8.34% stake for almost 434 odd crore. And there we go. Do bear in mind the facts. CLSA had sometime back, a month back, actually given a very bullish call on Solar Vineyards. Not sure if that's going to be a buying opportunity right there, but Mangalore Refinery and Petrochemical, which is touched in a 52-week high today. Now the stock has surged in 400% in the previous week, and today, like you can see on the screen, is also up by as much as 14% in early deals. But that's all that we have. Nifty is now around that 22,100 mark. Sensex is trading flat, and IT continues to be a bit under pressure. But that's that in terms of this edition of Trade. With this, it's a wrap. And goodbye from the entire team who puts this piece together for you. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us in the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Money Control app.